Good afternoon, traders. Hope you're all very well today. Um, my name is Nishal Patel, and I'm going to be conducting today's daily update. First things first, as always, having a look at the economic data for Tuesday, 26th of September. I've got a full range of announcements that have come out over the course of today, including slightly weaker ones. The big one, the big two, I would say, with the consumer confidence that came out just a touch lower than expected, but really not having too much of an effect on the strength of the dollar today. Also had new home sales out at the same time on the greenback, but the big one really is Yellen speaking in around half an hour from now. We've also had Brainard speaking, which was quite an interesting speech. The title of her speech, if I'm not mistaken, was Persistent Employment Disparities and How They Matter to the Economy's Health. And I think it was quite poignant, the title of her speech, and what she effectively said of how there is a huge difference based on employment rate of particular individuals, and particularly those that aren't as wealthy as others, and the notable effect onto the economy from those particular individuals, especially as we've had some information out on Trump's fiscal policy, or his proposed fiscal policy, that we will look at in a brief moment. But just having a look at other data coming out, we did have business confidence coming out on the New Zealand dollar. Very first thing this morning, not really taking too much or showing too much change, but that hasn't slowed down the weakness in the New Zealand dollar at all. Again, for the second day in a row, it looks to be the weakest currency on the block, and definitely showed its presence on the markets. But turning our attention to what has been said already today, what we want to be looking at. Of course, everyone's really going to be looking to Yellen's speech, as I said, in around half an hour now. Where she's due to address an annual conference or annual meeting on economics in Cleveland. She should be speaking about inflation, monetary policy, as well as uncertainty. So I think it's, again, quite a poignant speech that she's going to be given, especially the conditions, or most importantly, the conditions of the US market. Levels of inflation, we still know it's still below their 2%. The 2% target that the Fed have set, just like most other central banks globally, and the uncertainty of their effective unwinding of the balance sheets. So we know they're right now 4.5 trillion deep, and they are due to reduce or scale back and reduce that deficit that's on their $4.5 trillion balance sheet. And no doubt there is a huge amount of uncertainty that lies there. But as I said, we have also had comments out from President Trump. Says he wants to lower the corporate tax rate, and potentially bring back lots of investment that's been placed externally away from the US, and bring it back within the country. But from a leak that's been released to much of the media, he's also saying that he's potentially looking to increase the tax rate on the lowest earners. Now, I think that may be a really hard task to pass through Congress for Trump, purely for the fact that they are in a position where they are running that deficit. So trying to do that and trying to pass that through Congress may be a hard task for Donald Trump there. And as I said, it was quite poignant considering the speech that was given by Brainard earlier on, and she did give a very balanced account of her opinions as an intelligent person, and as what you would expect from a member of the FOMC and the Fed. And I think now we're going to see most certainly a ripple across the markets with Yellen speaking. Didn't see too much movement with Brainard, but most certainly going to see a change now. So let's have a look at our charts and let's see what's happened over the course of today. All right, guys, so just starting off on the dollar index, right now we see the right now floating at just under 93 on this index, breaking that 92.50 level with relative ease. I probably late this morning. I'm flying up and hitting this 50-day moving average. Please remember it's an EMA, not an SMA, showing the definite strength that we've seen across the board on the dollar. That really can be seen here on the state of play on the euro right now. Euro floating at 1.1779. Didn't take too much. Didn't take too much to push the euro short first thing this morning. Did see a little buy up on the side of the euro, as well as the sterling. In fact, over the Asian session, but fell quite swiftly in the early hours or the early state of play on European Open. Right now, the cable. Just having a look at cable right now, sitting just below 34.50, 34.38 right now, breaking the previous cluster of lows, or this area of consolidation that we've seen come and opening up on that 50% fib swing. Potentially, we should be looking for most certainly a deeper, more of a deeper pull than what was expected. But I still think that the sterling is quite robust. And this area of consolidation has most certainly shown it. We have seen the euro, as well as other currencies, drop in value considerably, but we haven't seen as much movement on the sterling and the effective depreciation in the value of sterling. So worth noting. Now moving on, just having a look at the yen. This is a 4-hourly time frame. Just going to quickly flick over to a daily time frame so we can see exactly what's happened. We can see a number of fibs on this chart. Please pay attention to the blue fib, which is off a weekly swing, taking it from the high and the low. On the weekly time frame, we can see it's still resting on that 618, having broken that over the course of yesterday and today, but really given up much of the gains that it did take on board from yesterday, most certainly from that uncertainty with North Korea and the political tensions surrounding that. Just moving on to the Australian dollar, we can see the relative weakness on the Australian dollar, as well as as I mentioned earlier, on the New Zealand dollar. But this really does show us the strength that we've seen across the board on the greenback. Just going to have a flick over on a couple of commodities as usual, and we can see I left this trend line on there from last week, just so you guys can see what happened. And over the course of yesterday, really saw the uptake of and that bounce off this 120 1290 area, or this level of support and resistance on this daily time frame, and I showed you guys how it bottomed out on this 4-hourly time frame, breaking this neckline, coming up, retesting this trend line, and falling short again. So playing out quite nicely. We are seeing obviously the price of gold falling short again off its highs that we saw earlier on at the start of September, and nowhere near where we should potentially forecast where this may go. But as I said, if you guys would like some further information on how we're looking to forecast the price of gold, feel free to get in touch with us at info@phoenixblue.co.uk, and we'll be happy to do that. Now, talking about the price of gold spot right now, floating at $12.99, or just below $1,300 per troy ounce. Still looking very bearish. Probably will change when that Yellen speech is going to come to play. Now, having a look at WTI, we can see it's rebuffed off that $52 per barrel level. We saw it just below that yesterday, literally rebuffed off that. We have had some further information out on the price of oil, and again we're talking potential dip demand here on the price of oil, so just keeping it afloat. So you know that there still is an uptake there, so please be aware of this chart, potentially looking for a break of this and then moving up forward up to the next level up. And many of you would have realized it's around the 54-55 region, and this 55 are flat out to it, many of its highs, and I'm sure that if you guys just follow this across, we've got 54.60 there of the highs that we can see on this chart back a year ago, just under a year ago. As always, guys, any questions, feel free to fire them off to info@phoenixblue.co.uk. We'll be happy to assist. Until next time, traders, happy